I had a really fun experience the other day. I was doing some updates on what's going on geopolitically in certain asset classes and sort of thing. And I was talking about the price of silver and how it had gone right up so high. And one of my students is sitting there and he goes real quiet for a little bit. And so I checked in with him later. I said, "Are you okay?" He says, "Yeah, I just checked on that investment that I did all those years ago. I just checked on that investment that I did all those years ago, and what had happened was he had invested 120,000 Australian into precious metals, a mix of gold and silver, and he hadn't checked his balance in about a few years, and he's up with an unrealized gain of $544,000."
Oh, what a great problem to have!
And so I said, "Okay, have you told your wife this?" He says, "Oh, I've sent her a screenshot, but no, she's busy at the moment." He said, "Oh, that's pretty good. I haven't had a win in a while. That's a good win to have."
And he probably just lost about 100,000 of it.
Well, possibly, but if you're investing in this sort of stuff, you've got to think very long term, and that's the thing. That was before the dip that's happened, and let's talk about that. So if we have a look at a chart at the moment, and this is in US dollars, these silver charts, it has been in a phenomenal situation where over the last few months we have seen silver go from crazy amounts. Now this is in ounces. There you go. Yep, cool. So it's trading currently at about $79 a US an ounce. Now, if we look at where it was, almost, what is that? I can't see the time. November. If we look at November, it was looking at $50 an ounce. Then it's skyrocketed up over the number of weeks, leading right through to Christmas. I mean, it had roughly 8-9 weeks of just going up all the time, and did about 100%. Over 100% in that period. That's extraordinary, okay? For an asset that's quite conservative, normally, silver and precious metals, it normally stores a haven of wealth. This is phenomenal what's going on. And then we've had this big drawdown happen on Wall Street prices as far as silver is concerned. I've had a few calls from clients a little bit nervous about it and this sort of stuff over the weekend, what's going on? There's a lot of different reports that are going on, but what I think is important to realize is that there's a disparity in the prices. So let's do that before we speculate what's going on. If we have a look at what we got to realize here is there's different prices, different exchanges that silver trades on. And at the moment, there's what we call the Wall Street price, and then there's the Shanghai price. And look at the disparity there. The Shanghai's in the blue, the Western in the gray. And this is in US dollars once again. Shanghai is wanting to pay $123 an ounce US, whereas Wall Street is wanting to pay,
79.
79. That chart hasn't quite updated there. There's a bit of a lag there.
But just for the people watching at home, the thing is that's not the only market that's doing this, because this is a different site. This is metalcharts.org. The other one was gold silver, I think it was goldsilver.io AI. So even the different charts, here we go, we've got 108.81 versus 79.11. This is the direct Shanghai market as well. So the market as a whole, like everyone's reporting the same thing. The Shanghai market is screaming for physical solid silver, where the Western market they've just had that massive short. Shanghai still had the same short, but not as severe.
Shanghai wants the physical price, the physical metal, I should say. Wall Street wants the paper price, which is the banker's price, okay? And so you've got to remember too, just before Christmas, the Shanghai market, China said, we are not going to be exporting any more silver from the 1st of January. Now that was massive. So those who are wanting to get their hands on this, because you think, well, why is this a big deal? Because physical silver is used for so much of our technology these days, and it is the best conductor of electricity as far as metals are concerned. So it's really important to have it. It affects everything from your smartphones to your computers running, through to your solar panels on your roof, through to your military operations. A lot of weapons depend on using infrastructure with silver, from bombs as well, and armament. And those are probably smaller use cases, but when they use it a lot, through to your electric vehicle and greenhouse type, what is it, electrification. This is all reliant on silver. And so this is what's really, really fascinating, is because it's about 2 years lag in having enough silver to keep up with demand in the marketplace. And Samsung just did a deal just before Christmas with a mining company in Mexico, and they have 2 years rights access to their silver. Now, why is that significant? Well, Samsung is developing a battery in the electric vehicle space where it will go about 900 miles, and I think its charging time is about 15 minutes, which massively helps people who have what they call range issues or range anxieties when you hop into an electric vehicle. But it's going to require that battery 1 kilogram of silver. The demand is going to go up in terms of moving towards the smart AI era. And so this puts us in a predicament where we're already behind in manufacturing on silver. And you've had for years banks short this asset and suppress the price for a long, long time. And this is what I think has happened. This is a lot of speculation is about as to why the price went down last week or over the weekend. And it's really, there's a lot of rumors. We don't know the full facts, okay? But there's a lot of rumors that it was perhaps the banks that were shorting it. Now, what does that mean? That they are selling, doing a trade where they are selling before they are buying. In other words, they are hoping to sell it at a high price and buy it back at a low price. Now, that messes with a lot of people's head, and I get that. It takes a while for me to understand it when I first came across it. But think of it this way: is that if you can start selling something before you actually own it, then you're selling at a high price, and then you can manufacture it perhaps at a lower price. I'll give you an example. I know a smart entrepreneur who, when plasma TVs were all the rage, they were the new thing. There was a shortage, I think, in Australia for that, and he figured out there was a factory in China he could get it very cheap for. So he didn't have $250,000 to actually do the deal. So he started selling them before buying them, saying it's going to be like a 40-day period of delivery before you're going to get them. And so he gets all the orders in, he's got the capital to do the order in China, and then he took the risk of bringing them over, and he was applying for every credit card he could get, all this sort of stuff to do the deal. But that was really interesting to watch that, and then came back and delivered them for profit. It's the same sort of concept. The bankers have been shorting this price for a long, long time, hoping it will go down. Now, the rumors are that some banks have been buying it while the prices are down, after they've done that big gain in terms of it coming down. So they put a lot of pressure on the price, wanting to short it and push it down. And there is a rumor that one or two of them have been buying it at very low prices in the meantime, and now they're flipping the switch and going long. In other words, they want it to go from low prices to high prices. Now, these are rumors. They're difficult to prove, but it is interesting when you have charts come up that show when the trade orders have gone through at different price points and they're big orders on the futures markets. What's also interesting in Spain, do you want to show that chart actually? There is a rumor on X.
That's what I was about to ask. So here you go. Just so people understand here on this one, the 633 that's got the underlined bit, that's how many contracts they have. Each of these contracts are 5,000 ounces at a time. So that's over 3 million ounces of silver. It's about $240 million worth of silver in this deal here.
Now,
put that
I want to add to
into
this
perspective. So industrial use per year, this is troy ounces per year, you're using about 600 to 650 million troy ounces of silver. This is worldwide production. This contract is about maybe 3/5 of the world's silver production, what's used in production in one contract.
It's massive. And what you've got to realize too, these are futures contracts. Now, futures contracts are not like the stock market. Futures contracts, when they expire, a deal has got to happen. So if you're selling it, right, you've got to then deliver on what the underlying asset might be. Meantime, if you're buying the asset at expiry, you've got to actually buy the consignment that you've said you signed up for. And this is where this is a real concern. There's a lot of rumors too that a bank has defaulted on this contract and wasn't able to deliver the amount of ounces that it was actually trading for. This is the rumor. So can we say it with certainty? No, but there's a lot of whispering going around, a lot of people claiming they know what's going on. Time will tell, but it's important to know the difference there.
So the other one, there's also the flip side of that, because with every single one of these contracts, there's a buyer and a seller. In this contract here, JP Morgan is the buyer. So they're acquiring 3.1 million ounces or whatever it worked out to be of silver. We have a 2-year delay in the production of silver. I'm wondering if the mining companies couldn't physically deliver because there's no supply. That's my other worry about on the flip side. Who was actually supplying the silver to JP Morgan? And I don't think anyone's asked that question yet. So,
well, if the contracts are closed prior to expiry, then they don't actually have to take assignment of the physical silver or the underlying. They can settle it in cash. And that's Wall Street being Wall Street often will do that with the expiries, is they will speculate on them and then get out of them before delivery is required, or fulfilling the contract. And that's what you got to realize. But my point is this is Wall Street prices that we're watching, and you compare it to the Shanghai price. The manufacturers are going, listen, we've got contracts that are worth 50 million. Hey, we'll pay $125 an ounce to fulfill this because it's worth 50 million to us. No problem, let's do the deal. And so you've got this massive disparity between what Wall Street wants to trade it at, the bankers and those who are shorting it perhaps, versus what Shanghai's wanting, saying, hey, we're in the manufacturing, we actually want assignment of this. We want the physical stuff.
Yep. So don't forget as well, so a lot of people don't actually understand how much silver is actually used in production. So it's about 55% of the world silver that is produced, 55 to 60% is actually used in manufacturing. It's not actually used in jewelry and all that sort of stuff. That's actually a small percentage of it. So if we were to take, just to put this in so people can understand how big of a discrepancy the Shanghai market has compared to the Western market, assuming the $20 difference. If you took this order, the 3.165 million ounces, and sent all of that to Shanghai and closed it out for a $20 profit per ounce, you'd be looking at nearly $65 million US profit.
Yeah,
so
big.
That's not bad for a single day's trade.
Right, but then you have the cost of actually having to ship it over and all that sort of stuff, insurance costs and handling costs.
Yeah.
But yeah, the point taken, it's a big arbitrage trade if you were to do that. I'm not suggesting they would. I think the banks want to hang on to it. I think the banks have realized they're going to be bullish on this. But yeah, they want to be the ones that are holding the biggest slice of the pie.
So with the way I'm looking at this one, have you ever seen a bank make large purchases in an industry that's going to collapse?
Have I ever seen?
I personally haven't. So investment banks, have you seen, let's say, as typewriters were going out of business, did you ever see the banks go, oh, you know what, we'll buy that typewriter business? No,
no, of course
you just don't see it. So
but we did see the collapse in 2007, 2008 of banks that were buying those wrapped up mortgages, right? Those junk mortgages. And we saw those collapse, and those banks had to be bailed out by the US government in those instances, which affected the entire real estate market, and then went on to a global financial crisis.
But then have a look at what happened to the property markets after that.
Yeah.
Banks that survived and got bailed out made an absolute killing on it, because the property market isn't going out of fashion. It's just had a massive... The downturn was bigger than what they anticipated. It's not that the houses were going out of fashion. So silver is another one of those things. It's not going out of fashion. So the way I'm looking at this, the silver market has taken a massive dip. I don't think this is a crash. I don't think it's the bubble bursting like the dot-com burst. To me, this is a lot of contracts at the same time got enacted. A lot of banks will have like a portfolio. So they'll have a property portfolio, they'll have a silver portfolio, they'll have some sort of joint venture investments. So they're pretty invested across the board. And with the silver and gold doing what they've done, to me, they've gone, you know what? This is massively high. Let's take the profit out of this and disperse it over all our other industries, because you have a look at NVIDIA at the same time, they went up. A whole heap of other these tech shares also went up. They had lots of investments coming back into them, so that's why they went up. So I think this is more of a leveling from not just the silver side of things. I think a lot of the banks and a lot of large investors have leveled off their investments. They've taken profits from this one, reinvested it into somewhere else, and we're already starting to see it starting to climb again out of market, like trading hours. So I'm really, really excited on this one. Personally, I do have silver investments, so I'm not selling up anytime soon.
Well, yeah. I mean, it depends whether you've got a paper trade or a physical trade. Because those wanting to get in on the physical, it's really hard at the moment. If you have a look at some of the dealers around, my favorite dealer at the moment, their inventory is just so low. They're trying to get supply in. And you're getting a lot of messages from mints around the world, US Mint and even our Perth Mint, was saying that, we've got to clear a lot of back orders, or the US Mint was like, we're not taking any more at the moment.
Mm-hmm.
And if you actually look at what the Perth Mint was doing, they're saying on their most popular coin, silver coin, Kangaroos, which is the cheapest one they make, yeah, we're not taking taking any more orders on it. I've had a quick look on their webpage before getting on air here, and yeah, it's crazy the price they're selling it at. The last time I looked, it was $120 ego, $128.28. That's gone up since I looked at it on the silver rectangular individual bullion coin. And then you go, that's a platinum. That one, that's not the right price there. That's not the kangaroo there. That's not silver. That's bullion. Sorry, that's platinum.
Just give me one moment, Derek. For some reason, my camera has decided to turn itself off. Bullion coin silver tube. So we can see here.
126.41.
Yeah, but that's also for it's a tube, so there's a series of them.
Yeah, for a tube, you're looking at about 20 units on it. Generally, that's kind of the standard.
Yep. So let's go find a standard platinum bullion, silver bullion coin. Here we go, unavailable.
There you go. Yeah, so just buying one is really, really, it's not available at all. And that's crazy, right?
1 ounce tube is unavailable as well.
Yeah.
I'm just going to turn my camera off for the rest of this one. I don't know why it's decided to play silly bugger, but it is.
So if we have a look at this now, can you do another wonder for me, Travis? If you could go to the silver price in Australian dollars on the first chart, trading view chart that we saw. So this is the US price at $77 now. It's fallen a little bit since going, but if we go to the Australian price, just get right. There you go, AUD. Thank you.
Yeah.
Okay, $111, right? So they're selling it at 100. What was it? 120 at the Perth Mint. 120. 126 was it?
Silver bullion. 126.
126. That's not their cheapest coin, and they do obviously all dealers add a premium above spot. That's how they make their money. Okay, and fair enough. But that's a very high price for what it is over spot. So that disparity there, and look, I have found there are other dealers that will sell those same coins for less, but they're just out of stock at the moment. You can't get your hands on them, and so yeah, that's a half ounce, $66.
Yeah, but as well.
What's that?
So the half ounce is out of stock.
Yeah.
Platinum's out of stock, no longer available. So a lot of these silver things are just no longer available, or they just don't exist.
Out of stock, no longer available.
No longer available. No longer available. So silver's definitely going. So it's constantly moving now as well. So there's a lot of volatility, a lot of trading going on at the moment. And you can see the rebound here. So it went all the way back up to 125 Aussie dollars before. So it went all the way up, came all the way down to the bottom of this wick. And it's gone all the way back up again. And now it's come back down to about here. So the 111.
Yeah. So is it getting support at that? Well, it's about $80 US. Is there support at $80 US? which is about 110 Australian.
Yep. So you're looking at that. That's about a $20 swing. If you have a look over here, let's just get rid of that one. Some of the biggest swings over here, top there, down to here. That's prior to all of this mess here. This swing here was considered huge. That just doesn't happen if you zoom right out. Like you can see the history of silver. It just doesn't have these massive swings. So this is all the way back to June 2024, April 2024. So we can go even further. There's a bit of turbulence here, April 2024, but nothing in the same categories as what was going on recently. So
the other thing that you'll notice is what we call the long wicks of the candle, right? Which is indicating the volume of trading that's going through. So these price differentials that started at the top of the wick ended at the candle. There's a candle in the wick. And so those little lines that are coming out of those rectangles, we call those the wicks. And the longer the wicks, the more volatile. So that's what its price ranges were within that trading session, that time, versus what it started at and what it ended at. And
I think it's really...
The wicks are getting longer and longer at the moment.
So I think it's really important just to explain something to people. Each of these candles, if you have a look up here where it says 1D, each of these little green and red things equals 1 day. When it's green, this is where the market started and this is where it closed. So the starts at the bottom, closes out the top, moves across to the next candle. When it's red, it starts at the top and it's come down. So that's the opening of trading, that's closing of trading. During the trading period, it's gone up to the top and down to the bottom of the wick. That's the full range of movement for that segment. So in this situation, it's 1 day. So if we look at this one here, it's called a hammer. The wick went all the way up to 170, but it went all the way down in a single day to 148. So you're looking about a $52, $53, sorry, $23, $24, $22, $23 movement in a single day, which prior to the last couple of days has been huge, but it's stopped relatively there. It didn't really move much by the close of business. So it went all the way up, all the way down in a single day. So that just shows how much people were trading on that 1 day.
And you can see it's gone from 171. It's gone from 171, the wick of that candle there, almost 172. Yeah, right down to
all the way down to here.
Down to here. So and we're looking for a support line as far as trading is concerned and where the resistance is. But you know what? You can't ignore Shanghai and what its market's prepared to pay for it. And again, going back to that chart, that's the Wall Street chart that we've been looking at. This is where a lot of the feeds are coming off as far as the dealers for the retail market is concerned. They're looking at that one. But the manufacturing market is going, hey, give it to me. I don't care because our contracts are worth, $50 million or whatever. We'll pay a few extra bucks for those ounces.
To be honest with you, I think it's getting kind of close to the support.
Excuse me.
But this is one of those ones, it's really hard to say where the support is because there's so much movement on it. So
we have no precedent on this, right? This is all new territory for silver. This is a big deal. Now, you might be going, well, why are we just so focused on silver? Because it's gold and silver regarded as real money. Okay, your fiat money is based on a credit note from the good old trust of the central bank and the deal it's done with the government, the treasury. It's not based on real money, whereas in old-fashioned terms, so your fiat is inflationary. In other words, the more they print, the less it can buy. Whereas a good old-fashioned gold and silver, it depreciates in value. In other words, it goes up and can hold its value. But we're looking at this and what silver is doing. It looks like it could buy more, and gold is changed. And I say this is a big indicator. I believe that we're going back. The US is going back onto the gold standard, and we've seen early indicators of this kind of movement happening. Russia was looking at doing this with its ruble when it got sanctioned some years ago. We look at Zimbabwe with its new issuance of currency called Zimbucks, which is backed by gold, silver, and foreign currencies. We also see this kind of indication with the Genius Act that the United States passed in relation to the crypto market, saying stablecoins had to be backed by something. It couldn't be made out of thin air. So there's this trend going where money has got to be backed by something. And again, for the bankers, that's gold. They say for those out on the street, it's silver. For the manufacturers, well, they look at it from a whole different perspective. And that's the anomaly around silver.
Yep. So the one final thing I'm going to do before we wrap up, Derek, you can see there in the news. Now, this is one of the reasons I love tradingview.com. They give you all the news events that are coming up, any earnings that are coming up. It's a great source of information, and their charts are actually really easy to read. You can see here, Newswire is actually reporting that.
We can't actually. It's only seeing myself.
Yeah, I had it on there before. So if we go back to this one here, so you can see down here, sell-off in gold, silver offers buyers opportunity. Market talks. This is from the Newswire, who does regular reporting on the foreign exchange trading, gold, silver, commodities, and stuff like that. Really great source of information. So the general consensus from most of the analytical companies out there is that silver hasn't had a burst. It's down at the moment, but they're seeing this as a massive buying opportunity. And then when you have a look, if we go back to this one here, this chart here about the JP Morgan's buying an insane amount of silver as well, when you start looking at what all the big players are doing, you can kind of get a feel of what's going on. So again, you have to make this decision for yourself. You can't listen to us because we're legally not allowed to give you personal advice on things like this, but you can start seeing patterns. And so if you want to learn more about how to view the world and understand how these big players actually think and how they view the world, seriously, go to Derek's course. Did you like the segue on that one? So the link here on the bottom of the screen now is short url.at/5uuxe. So Derek, final thoughts before we wrap up for today.
Exciting times. We are seeing the financial system change. I've been saying it a while. It sounds wild, I know, but we're literally watching and witnessing history play out here. This is generational. This is not a normal anomaly. And you remember, Travis, when I was saying some years ago, I believe silver is going to go up. I believe silver is going to go up, and we're witnessing that now. I've been saying that since the show started, which was, I think we started, in 2022, 2023. So, no, it would have been 2022. So, we're watching and witnessing that right now happen. The whole system's changing. The US debt is no longer sustainable to manage on the fiat. And so people are rethinking how money is done. These are exciting times ahead. Hold on. This year is going to be a full-on year. There's going to be a lot to report. So, Travis, I hope you're well rested.
No, definitely am. So anyway, Derek, once again, thank you very much for coming in. I don't know what's going on with my camera. I'll have to go get another one. Anyway, so this has been the Greater Wealth for the people watching online. Thank you for tuning in. Please do go see Derek's course. They're great live events, and it's a great place to actually ask questions that you really can't put to the public. But other than that, help him out. Go see him, blueskyfactory.com.au, and another amazing place for sources of information. So this has been the Greater Wealth on edgeradioaustralia.com.